because a lot of people think if I put my money into a treasury bill, I get safety. Look at whether that's giving you a return that's compensating for inflation. And maybe we're all wrong. Maybe there's nothing to worry about. So how do I deal with that? I look at three major forces that are happening now, haven't happened in our lifetimes, but have happened many times in history. And those three major forces are the creation of a lot of debt and the printing of a lot of money to buy that debt, particularly because the government is running large deficits. They don't have enough money, so that government has to print that money. So that creation of all of that debt and its financial implications and its economic implications is one force. The second force is the internal conflict, the amount of conflict that's largely due to the largest wealth gaps that we've had since the 30s. That produces populism of the left and the right, particularly when there are financial difficulties. The third force is the rising power challenging the existing power, largely in the form of China and to some extent Russia. Let's call it the great power conflict, because in 1945, there's this cycle. You have a war, then after a war, you have winners, and the winners determine the rules of the game. And then there's this evolution of others becoming more competitive, and then you have a conflict again for who's in control. So we have that dynamic taking place. So those three influences, the financial, the internal conflict, external conflict influences. I learned before that when I was surprised, often it was because of things that hadn't happened in my lifetime before, but happened in history because of that reason. I went back and studied history, the last 500 years, on these cycles. There are big cycles that last about 75 years, give or take about 50 years of rises and declines. I think it's so important people understand it. I also learned in studying history that there were two other influences that were very big, and you could see them. The first was acts of nature, such as droughts, floods, and pandemics. The changes over time in the evolution over time of people's learning and the technologies they make. So I'd say there are really five big influences that drive everything. And since they each affect each other, it produces what I call the big cycle. So as we go now into this, it's important. One man's debts are another man's assets. So what happened? Government had to sell a lot of debt. When it sold a lot of debt, there were a lot of entities that bought a lot of government bonds. And money was very easy, which meant that short-term interest rates were very low. And money was actually being given away because they had interest-only loans and interest rates were less than 1%. And you didn't have to pay back principal, so you could go get money. And so that created a lot of debt and it created buying of government bonds. What happened to many, many entities all around the world, not just banks. What does a bank do? A bank takes in deposits, typically, or debt in some way, and then it buys debt. It can do that in the form of making a loan, or it could do that in the form of buying a government bond, buying debt. And then when interest rates went up, the value of that debt went down. Money they had to give to depositors became more and more expensive. And also depositors, wanting them to be competitive, looked at money market rates or other rates and withdrew money from the bank because they had better uses. Okay, so what that leaves them with, it's a banking problem that has happened literally for thousands of years. What they do is the depositors, want their money back, and they're holding assets that, in this case, have gone down in value, so they're broke. What happens for the economy as a whole is then they print the money, because they don't want defaults. There's a tolerable amount of defaults, and then you get past a tolerable amount of defaults, and it just crushes everything. And so they print the money. It's not a banking issue. It is a global issue all around the world. Pension funds, insurance companies, the world is leverage long. Long, meaning they own stuff, and they borrowed money to own it, and it's going down in value. The big issue is the government can come in and print the money and give money to anybody they want to give money to. But when they do that, that typically devalues the money. Think about it. If you're holding a bond, you got a claim on money, but the claims are too much. one way or another, you're either not going to get back that money in full, or you're going to get back money that's worth less because they print the money. But if the money's hard, if that's going to be good money that's coming back, it's going to be hard for those entities to pay back because it's a lot relative to their income and cash flows to pay it. And that means that the default risk rises. However, it means that the debt will be bad one way or another. It's either bad because they don't pay it and needs a haircut for them to pay it, or because they do pay it with money that is going to be printed to come back. So think of it this way, just want to make this clear. When there was the position that interest rates got a lot below the inflation rate, you're losing buying power. There's no good reason to own that. And there's a change in psychology, because before there was, I own bonds, I'm getting a price appreciation, even though I'm getting, let's say, a low interest rate, but inflation isn't a problem until it's a problem. Then when it's a problem, because they print so much money and they put it out, then inflation goes up and a light bulb goes off. People realize it's not safe. I'm losing money to inflation. And then the other side of it was you want to borrow and buy stuff because money's free. So companies borrow and buy stuff, and individuals borrow and buy houses, interest-only loans on the houses. I mean, like, okay, I can buy a house, I can buy an apartment. But that creates the imbalance where it's terrible to be a lender and a creditor, and it's good to be a borrower and do that. The Federal Reserve says, I better fight inflation. They change things. And so by raising interest rates, real interest rates much higher, lo and behold, all the people who did all those things get hurt. Because yields got so low, tech companies and others, those who have a dream, they don't have to necessarily make profits. They're selling a dream, and the money's got to be invested. You see all of that change radically when that tightening of monetary policy. So now you sit there and have a lows. What is the value of a financial asset? It has no intrinsic value. Its only value is what it can buy. But there are many, many more financial assets out there there's ever been relative to the value of stuff to buy. There's too many claims out there. It's like musical chairs. If everybody says, oh, wait a second, let me get my stuff, let me convert my debt assets, I want to get real stuff, that's a real problem. And so that's the global picture on the first of those 5 influences. The fact that it's happening with the other influences is very important because they affect each other. So this financials picture, by the way, is the same as in the 1930 to 45 period and the same as they were throughout history.
For people that don't know, that's World War II.
It started with a financial crisis that then caused internal conflict. What do we do about the financial crisis? The populism of the left and populism of the right in this internal fighting. And 4 countries that were democracies chose not to be democracies because of the conflicts that were existing. And those countries were Germany, Italy, Spain, and Japan, because there's a lot of internal conflict over wealth when you have that. And so that creates a lot of internal disorder, in some ways almost civil wars, everywhere, some form of civil war. And of course, that happens also at the same time as there's the external conflict. First of all, everybody's fighting over resources. You have populists come to power, and the populists are not compromisers the way democracies work. And you've got to pick a side. There's no place for moderates. And the sides are, let's say, internally in the country, the left and the right, and externally, the Americans and the Chinese. And you got to pick a side and fight.